Hello, good afternoon, everyone. Welcome to Merck Training and Consulting webinars. My name is Adnan Aqil, and I'm excited today to be with you talking about this important topic, the forecasting tools of Excel, and in specific, what can we do through the what-if analysis. I'm starting giving you a brief about the webinar. The webinar duration is 30 minutes. This could be followed by 15 minutes of questions and answers. The webinar is already recorded and will be published on our website, which is merck.com. And I'll be sharing the files that I'm using in the webinar with the participants through the chat. And these are basically a link to a G Drive that you can access the webinar files. All right, and now what-if analysis is a great feature of Microsoft Excel. To be specific and understanding what-if analysis basically does, it's a process of changing values in particular cells and seeing how these values would impact outcome or of formulas that is basically on the worksheet and another cells. So it's like sometimes we call it like in finance sensitivity analysis, changing an assumption or a variable and see how that would impact the outcome that comes out of this model or formula itself. Please, if you don't mind, just mute yourself. And once I'm done, we open the floor for the questions and answers. You can ask any questions, please. We will be covering 3 types of what-if analysis: goal seek, scenario manager, and data table. Okay, I'm starting with the first one being the goal seek. Now, what you see here on the screen, this is like a very basic model, and this is what we call a cost volume profit analysis, or a CVP. In this model, taking into consideration some assumptions. For example, my sale price per unit, for example, is $10. I'm expecting to sell 90,000 units, and the cost per unit is $4. Now, taking these assumptions into consideration, my total revenue is basically the quantity multiplied the price, coming to 900,000. Variable cost is the quantity multiplied by the cost per unit, that comes to 360,000, and I have assuming a fixed cost of 515,000. This will leave us for a profit being $25,000. Now, based on this model, if I would like to know, to achieve break even means a target profit of 0. How many units I need to sell in order to achieve the break even? Now, this is not a straightforward task, because simply it's not a matter of only having like a sale price and the variable cost, but because having 2 types of costs, the variable and the fixed component. So a goal seek feature here will be really helpful. Now, how do we start with the goal seek? Goal seek and all the what-if analysis, these are features that normally access through the data tab. So going to the data tab, on the right-hand side, there is a specific group called forecast. And part of the forecast is the what-if analysis. So hitting the what-if analysis, we can see the 3 types of the what-if analysis: the scenario manager, the goal seek, and the data table. For this particular exercise or file, I'm going to explain the goal seek. So I'm going to launch the goal seek. This goal seek screen will pop up. It has 3 things that I need to define properly in order to get the right answer. Number 1, setting cell. Which cell I would like to set to have my target, basically. I want to sell the profit cell, which is B11. Now, this cell, what is the value that I would like Excel to get me in this particular cell? Now, in order to break even, the profit needs to be 0. So I'll just need here to manually insert 0. The last component, how you would like to achieve the zero profit by changing exactly which cell in the model, by changing the sales in units, which is cell B4. Now, once I press OK, Excel is going to do multiple like trials and errors, changing this cell and basically monitoring when the profit will reach my target, which is 0, and then it's going to stop. Now let's try this by hitting OK. As you have realized, Excel, that made multiple iterations until it reached my objective goal that yes, now the profit is 0, and this is achieved by selling 85,833 units. Now, if I like the new result, I just hit OK. If I don't want the new result, I want to go back, I need to hit cancel. So for example, let me hit cancel for the time being. I will go back to square one. Now, another thing that I would like, for example, to see, if management, they don't want to break even, they have a target profit, they would like to achieve $80,000 of profit. Again, I'm going to run another goal seek for this matter. So from data, what if analysis, we start the goal seek. The cell I would like to have the result in is the profit cell, which is B11. This, I would like it to be 80,000. The target needs to be hard-coded or manually entered in this scenario. And this needs to be achieved by changing the quantity of units sold. Clicking OK now, Excel will run multiple iterations until yes, my result is achieved. Yeah, I can achieve a profit of being my target, 80,000, and this is required to be having a quantity of sales, 99,167 units. Few notes for you in order to make sure that you don't encounter any issues with the goal seek. First of all, the item that you would like to change, or that you would like Excel to advise you how much this item needs to be, or assumption or variable, for example, this needs to be a hard-coded, meaning a manually entered number, which is the quantity. This cannot be a formula. If it's a formula, Excel will not be able to sort it out for you. The other thing, the target, which is here the profit that you would like to achieve, this needs to be a formula. So this is the opposite. This must be a formula, and the first one must be a manually entered or a hard-coded number. And the last criteria, that the first one, that is a hard-coded number, needs to be an input, or it will impact the formula that basically we should have the goal inside. So a hard-coded number here, a formula here, and this hard-coded number needs to be linked through a formula with the ultimate objective, in our case being the profit. Okay, so this was the goal seek. Now I'll be moving on with our second type of what-if analysis. And here we will be moving to the scenario manager. Okay, scenario manager, from the name you can tell that, all right, I'm basically creating scenarios. Yes, that's right. So in scenario manager, this is mainly useful when I have a scenario or I have a model that I would like to run multiple, for example, possibilities or iterations on. So what you see here on the screen, this is like a very basic scenario where I am having on the top part my assumptions, being how many units I'm expecting to sell, what is the tax rate, the sales growth percentage, how much is going the sales, for example, in terms of quantity, it's going to grow year on year. What is my selling price, product cost? The cost will increase by 5% annually. The sale price will increase by 3% annually. Now, taking these assumptions into consideration, I have forecasted a very high-level income statement for the coming 5 years. And this high-level income statement is shown here, where I'm using the assumptions to predict my revenues, costs, the profit before tax, and the tax and the net profit ultimately for the coming 5 years. Now, After creating this base case scenario, it's highly unlikely that the future will 100% match my predictions. So it's always prudent that I come up with additional scenarios. What will be the situation if the assumptions, the real ones, are better than what I have used, or they are worse than what I have used? So how do we create these multiple scenarios? Same place, you go to the data menu, going into the forecast of the what if analysis. And here we need to launch the scenario manager. This screen or this window will come up. First, it says that I don't have any defined scenarios. Yes, I would like to add my first scenario. So hitting the add button, I need to define a few things. First of all, what is the name I would like to give for this scenario? Here, I'm going to mention best case. Now, what assumptions, what variables I would like to change? I would like to change for example, the quantity, which is B3. Since I would like to change multiple variables, I need to hit the control button and then select the other variables. For example, I would like to also change the selling price and the product cost. So in total, I would like to change the quantity, the sale price, and the product cost, being these cells B3, 5, and 6. Here you have the option to leave a comment. Why are you creating this scenario? Any clue, any basically, note that will help you in the future remember or give you some, visibility regarding this. So simply I can say here, based on discussion with CEO, for example. Now I'm ready. I'm be hitting OK. So for these three variables or assumptions that I decided I would like to change, here I need to insert their new values. So units sold, originally it's 8,000. I'm expecting this to jump to 15,000. The selling price expected to shoot to 14, and product cost expected to be $8. Okay, I'm done. So I'm going to hit OK. So the first scenario is added, best case. Let me show you. I would like to add one more. So one more time, add. This will be considered my worst case scenario. The changing cells, I would like to change the same cells, so I don't need to change anything here. Comment, for example, based on COVID-19. Okay. Now I need to give new values. My quantity of units to be sold expected to drop to 5,000. The sale price is dropping to 6, and the product cost going down to 4. Okay. So with these steps, I have created these two scenarios, the best and the worst. Now I would like to see the results. So I'm going to hit here the summary button. For the summary button, I need to define only one thing. Excel is going to take these two new scenarios based on the new variables or assumptions that I have placed, and it will replace these assumptions in the model itself. Accordingly, the entire results here, the high-level P&L, is going to update. The result cells means what part of the model you would like to monitor or you would like to see once it gets updated. So I would like to see basically my net profit for the coming 5 years. Hence, I'm going to select the bottom line being the net profit for the coming 5 years. And simply, I have the option whether to take it into a scenario summary or scenario pivot table report. No, I would like to keep it as a scenario summary. Hitting OK. Now a scenario summary sheet is added. And I'm just going to zoom in and let you know how is this understood and explained. First of all, these are the assumptions that I decided to change: the units sold, which is the quantity, the sale price, and the product cost. And these are the results that I decided to monitor. What will be the impact on as a result of changing these assumptions? Column D has my original scenario, or what we call the base case scenario. These were the original assumptions, and these are the output in terms of net income per year. Column E has my first scenario that I decided to call the best case. And this is the comment I left, basically based on a discussion with the CEO. These are the new assumptions for the quantity, sale price, and product cost. And these are the new net profit per year that will be resulting from changing the assumptions. Similarly, column F is my second scenario, the worst case. This is the comment, the new assumptions, and the new results as you see here. Now, going back to my original model, I can see that nothing has changed here. This is still my base case scenario. There is another feature which is also very much handy, being the following. So if I go again and I launch the scenario manager, here I can see both scenarios that I have added, the best and the worst cases. If instead of going into the summary, I select best case and I hit show, what's going to happen? The new assumptions immediately came here, and based on changing these assumptions, the entire model would change here. So this is no longer the base case scenario. This becomes the best case scenario. Similarly, if I select worst case and hit show, this will be the entire worst case scenario. So using the scenario manager, I have two options. First of all, you have to add a scenario, define the new variables, and then it's up to you whether if you have multiple scenarios, or at least you have added one scenario, you can see a summary that will compare the base case scenario with the new scenario, or multiple scenarios. Like in our case here, I have the base case, best, and worst. Otherwise, if you like to see the new scenario altogether on the original model, you just need to click show. You select the scenario type you want and you click show, and automatically the original model will be showing the new scenario that you have selected to be shown. This is in summary, what do we mean by scenario manager? It's again a quite powerful tool that helps us in running multiple scenarios and see what will be the differences among them. All right, now we move into the last type of the what if analysis, which is my basically favorite. This is called data table. Now in Excel, data table can be done using a one variable or two variables. Here I'm going to explain both of them, or sometimes we call it like one variable or one dimension. So variable or a dimension, basically it is the same thing. In this model, I have a very simple calculation and model and assumptions. I have the sale price, quantity expected to be sold, how much discount I'm offering to my clients. Accordingly, net revenue is calculated. That is the revenue taking out the discount. With a tax rate of 40%, how much net income is left? Now, what I'm trying to do here, maybe you can have an idea from the table that you see. I would like to test what will happen to my net income here when I have different levels of quantity sold. All right. So this is the type of data table I would like Excel to generate for me. Step number one, since I would like to monitor the impact on net income by changing an assumption, and in this case, it is the quantity, I need to inform Excel that, yes, I'm concerned about the net income. So that's why in this cell, this is a very crucial cell. This cell, I need to link it equal the net income that comes from the model itself. Without doing this linkage, Excel is not going to know which part of the model you would like to see the impact on. So first of all, net income is linked with the model itself. Then I need to select these cells and launch the data table. From data what if analysis, go into data table. Here, this small window will come up and it will ask me basically two things. As we said earlier, the data table can be done by one or two variables. Same thing as like one or two dimensions. Now, number of variables basically depends on the number of assumptions that we are changing. So in this scenario, I'm changing only one assumption, being the quantity. So I need to select either the row or the column. So how do I know? The assumption I'm changing is the quantity, and the new values are shown here in column G, means they are coming in a column. So that's why I need to select the column input cell. And since these are related to the quantity, this needs to be linked to the quantity in the original model. So this is the logic. After I do this linkage, just hit OK, and boom, we are done. So I have created like 15 possibilities or 15 scenarios of different net income levels by changing the quantity itself. How do I know if this is accurate or not? Basically, my original quantity in the model was 80. So here at the 80 quantity, I'm getting a net profit or net income of 1920, and which is matching with this one. Yes, it's perfect. This is the one dimension or a one variable data table. Now I'll show you how to do a two variables or two dimensions data table. This is my model. Again, the sale price, the quantity, the discount, and the net revenue. And I would like to assess what will happen to my net revenue if two variables are changing, the price with multiple levels and the quantity using multiple levels at the same time. Again, step number one, I need to tell Excel what exactly I'm looking for or I would like to assess. So it is the net revenue. Hence, this cell needs to be linked with the net revenue coming from the model itself, being here 3,200. After I do this link, then I'm ready to start my two variables data table, selecting these cells, and from the data menu, launching the data table. Now, obviously here I need to use both the row input and the column input. For the row input, my price assumptions are placed in row number 9, hence that will go as row. And since this is the price assumptions, I need to link it with the sale price in the model. The column input is related to the new quantities and needs to be linked with the quantity of the original model. Hitting OK now will show us this amazing matrix or data table, a two variables data table. And basically I have like 15 different quantities and I have 10 different prices. So in total, I have 150 possibilities or 150 different values that we were able to generate in a few seconds. All right. To assess the accuracy, my base price is 50, quantity is 80. So at price of 50 and quantity of 80, my net revenue is 3,200, and this is perfectly matching my model as you see here. Okay. Now, if you'd like then to change anything here, you can do it simply. For example, I don't want this to be 70, I want to make it 80. Simply change the assumption here and immediately this will get updated. All right. So once you build your either a one variable or two variables data table, you can simply go back to the assumptions on the table itself, change any figure, and then automatically the data table values will be updated. All right. I hope you liked the what if analysis features of Excel. Here we have covered all of them. We have covered the goal seek, the scenario manager, and the data table. So please feel free to ask any questions. Oh, all right. I can't hear you. I'm not sure if anybody is trying to communicate with me. Maybe you don't have any questions. Thank you again for your attendance, and looking forward to meeting you in future webinars of Merck. Thank you, and see you again.
Merck.com